Hello traders, hope you're doing great. Today we are going to learn about a powerful trading method based on W.D. Gann's principles. This strategy will help us synchronize time and price to predict market movements with higher accuracy. Understanding market cycles and key price levels is crucial for any trader looking to improve their entries and exits. Through this method, we will analyze how price reacts at specific time intervals and why certain price levels act as major turning points. By the end of this session, you will have a structured approach to identify high-probability trade setups with greater confidence. Let's dive in. Trading involves significant risk, and past performance does not guarantee future results. Trading in financial markets carries the risk of losing all or part of your investment. It is not suitable for everyone. Ensure you understand the risks and seek independent advice if needed. Before we get into the details, let's first understand what this method is all about. Gann believed that markets move in cycles and that price movements follow mathematical relationships. By studying time and price together, we can identify key reversal points and improve our trading accuracy. This method is designed to help traders anticipate movements before they happen, giving them a strategic edge. The beauty of Gann's approach is that it applies universally to all markets, including Forex, stocks, and commodities. Now, let's move ahead and understand the core principles behind this strategy. Before we get into the details, let's first understand what this method is all about. Gann believed that markets move in cycles and that price movements follow mathematical relationships. By studying time and price together, we can identify key reversal points and improve our trading accuracy. This method is designed to help traders anticipate movements before they happen, giving them a strategic edge. The beauty of Gann's approach is that it applies universally to all markets, including Forex, stocks, and commodities. Now, let's move ahead and understand the core principles behind this strategy. Here's a quick roadmap of our method. Each step is essential and builds on the previous one. First, we need to identify the initial impulse move because this will determine the upcoming trend. Next, we use time cycles to predict when significant market movements will occur. Then, we apply price squaring to find strong price reaction zones. Finally, before executing a trade, we confirm our setup with additional indicators to increase accuracy. Now, let's dive into each step in detail. First step, identifying the impulse move. The impulse move is a powerful price movement that marks the beginning of a trend. This could be a strong breakout from consolidation or a sudden surge due to economic news. Traders need to spot this move correctly because it sets the foundation for all further calculations. Once we identify this move, we can move on to applying time cycles. Now that we have identified the impulse move, it's time to bring in time cycles. Gann discovered that markets move in predictable cycles. By analyzing past price movements, we can identify recurring time patterns and use them to anticipate future market behavior. These time cycles act as invisible forces that influence price movements. If price reacts at one of these cycles, it can signal a strong trading opportunity. Let's move on to the next step, which is price squaring. This is a crucial step where we combine time with price. Gann believed that price must be in balance with time for a true market reversal to occur. By squaring price levels, we can identify key support and resistance areas where price is likely to reverse. Let's move to the final step, market confirmation. We are now at the final step, which is market confirmation. Before placing a trade, we must confirm our analysis with multiple factors. Candlestick patterns, volume, and market structure all add strength to our setup. If everything aligns, we have a high probability trade. Now, let's move forward to an example to see this method in action. We have a pound sterling to US dollar chart in front of us, and we will break down how to apply the Gann Time-Price Synchronization Method step by step. First, we look for the initial impulse move. In this case, we observe a strong bullish movement where pound sterling to US dollar surged from 1.23627 to 1.28948. This sharp rally represents a clear impulsive wave, signaling a potential new trend formation. The high at 1.28948 is formed from a weekly key level, which is also an order block, making it a strong resistance zone. To confirm this impulse move, we check for a large price movement with increasing volume, which we can see clearly on the chart. We now mark the swing low at 1.23627 and the swing high at 1.28948 as our reference points. Why is this important? Because this movement will serve as the foundation for our Gann cycle projections. Next, we plot the Gann time cycles starting from the impulse move. These cycles help us anticipate when the market might experience a significant reaction. So let's see how market reacts around these time levels. In this slide, we apply the concept of price squaring to identify key support and resistance levels. By taking the square root of the swing low 1.23627 and swing high 1.28948 and then squaring them back, we derive significant price points. The calculation gives us 1.236 as a strong support level and 1.289 as a potential resistance level. Now, as we look at the chart, we observe how the market reacts to these levels. If price respects them, bouncing off support or facing resistance, it confirms their significance. Otherwise, we may need to look at additional factors for validation. Now, as we can see at 26 bars and the 1.236 price level, a reaction has occurred. The market has responded at this cycle point, confirming the significance of the 26 bar time frame. Following this reaction, the price has started making higher highs, indicating a potential continuation of the uptrend. This reinforces the idea that time and price cycles align to create key market turning points. Look at this chart. The move we predicted has resulted in a 423 pip upside move. This confirms the effectiveness of our Gann time cycle analysis in identifying strong trading opportunities. The reaction at the projected cycle point provided a very good buy opportunity, aligning with our expectations. Not only did this setup offer a swing trading opportunity for capturing larger moves, but it also provided intraday opportunities for shorter-term traders to take advantage of smaller price fluctuations within the overall trend. This demonstrates how time and price alignment can enhance both short-term and long-term trading decisions. As we can see in the chart, we are currently at the 52 bar, a key time point that could present another trading opportunity. From the previous move, we can confirm that the bullish bias has already been established. This means that we don't always need to look for a perfect square between highs and lows. Instead, we focus on how the market reacts at significant levels. At this stage, we will closely watch the fair value gap around the 52 bar for a potential reaction. If the price respects this level, it could provide another high probability trading opportunity in line with the prevailing trend. As we can see in the chart at the 52 bar, we did not get a retracement to fill the fair value gap we were watching. Since price did not react as expected at this point, we shift our focus to the next key time bar. Here, as we approach the 90th key bar, we can see that the price has retraced to the fair value gap we were watching. Now that the price has reached our key level, we will wait for confirmation signals of a reversal before taking a position. This could include bullish candlestick patterns, a shift in market structure, or other technical confirmations. Once a valid reversal signal appears, our target will be the next buy-side liquidity, which is the high marked on the chart. This is where resting orders are likely placed, making it a logical profit target for this trade. By following this structured approach, we align our trade with both time and price principles, improving our chances of a successful move. As we can see, the market created a low at the fair value gap and then pushed the price higher. Now, if we look at the chart, we can see that at the exact 99th bar, the market took out the previous high. This confirms that price moved as expected. However, according to our method, time and price did not align perfectly for an ideal entry. Since our approach requires both time Gann cycles and price key levels like FVGs and liquidity zones to synchronize, this move does not qualify as a high probability trade setup. While the market did react at expected levels without the right time confirmation, we avoid taking the trade to maintain discipline in our strategy. As we can see in the chart, the market has already taken out the old high on the 90th bar. This means price is now trading above a key high, which is a significant level of liquidity. Since targeted liquidity has been taken at this key time cycle, we now anticipate a possible retracement or reversal. At this point, it's important to wait for confirmation. We look for signs such as a rejection wick, bearish engulfing candle, or shift in order flow to validate the reversal. If confirmed, this can provide an opportunity to align our trade with the next phase of market movement. As expected, after a period of consolidation, the market formed a bearish candle that closed below the previous bullish candle. This is a strong reversal signal, indicating a shift in momentum from bullish to bearish. The break below the bullish candle confirms that sellers are gaining control, leading to a downward move. Following this confirmation, the market dropped 384 pips to the downside, providing a significant trading opportunity. This move aligns with our analysis, reinforcing the importance of waiting for clear confirmation before entering a trade. Now, let me give you the entry criteria and stop-loss rules for our trading strategy. We will only buy or sell when the price reaches a squared level at a specific Gann time cycle. This ensures that both the price and time are aligned for a higher probability trade. Once price reaches this level, we need to confirm the market's intent through additional tools like candlestick patterns, volume, and RSI. These confirmations help us ensure that the market is reacting as expected and give us the green light to enter the trade. Our stop loss is placed just below the nearest swing low if we are in a buy trade, or above the nearest swing high if we are in a sell trade. For the take profit, we aim for the next squared price level or the next major time cycle. Let's move forward to the conclusion and wrap up our discussion on the Gann Time-Price Synchronization Method. This method provides a structured approach to market analysis by combining key elements: impulse moves, time cycles, and squared price levels. By aligning price action with time-based cycles, traders can anticipate high-probability trade setups, allowing for more informed and confident decisions in the market. That's it, traders. We've covered all the steps of the Gann Time-Price Synchronization Method. With proper practice and consistent application, this approach can significantly improve your trading accuracy and decision-making. Now, it's time to take these concepts and start applying them on real market charts. The more you practice, the better you'll get at spotting high-probability setups and aligning time and price for more effective trades. We'll meet in the next session, where we'll dive into another powerful trading method that will add even more tools to your trading toolbox. Stay tuned and keep practicing until then.